Kia ora koutou and welcome to Markets, Mystics and Mayhem, a weekly podcast with Kiwibank's economics team alongside the occasional special guest. We'll delve into the data, decipher policy decisions, monitor the markets, and analyse the issues impacting the Kiwi economy. Let's get into it.
Kia ora koutou and welcome to another week, another episode 14 of Markets, Mystics and Mayhem. This week we're going to talk about the Kiwi household and spending patterns. What's happening? Oh my God.
She just started laughing. I thought you were going to do episode 14.
My kingdom for an economist. Kia ora koutou and welcome to another episode of Markets, Mystics and Mayhem. It's our 14th, and this week we're going to talk about the Kiwi household and spending patterns. We've had a look at our data and we've come up with some interesting insights. And when I say we have looked at our data, MJ, actually it was you that did all the work. Why don't we get stuck into it? I'm keen to hear what you found.
Yeah, well, one of the best parts or the funnest parts about working at a bank is we get access to transactional data, so credit and debit card spending. And we're really sitting on like a gold mine here because you really get into the details of how consumers are acting. It's a very good sort of forward-looking measure because you can kind of see what happens before we get the bigger data out. But it was particularly useful over COVID. We saw a big spike in grocery stores, pets and everything. So it's really fun data to play around with. And this, the recent report we wrote was around the Black Friday, the November sales. And this time around, we saw an encouraging increase in consumer spending. So the volume of spending, the volume of total spending in core retail, things like department stores and all of that rose about 4%. But the value of those transactions actually declined about 2.5%. So better put, the value per transaction was about 6.2% down from November last year. And I think within that, you could say we're spending, we're spending more to get less. No, we're spending less. We're spending less to get more. Partly because of price discounting, but also maybe the actual basket, what we're buying, has changed.
Yeah, I think that's interesting, right? So if we look at it, there's obviously a lot of discounting happening at the moment, right? Which is good and bad. It's good for the consumer. I think it's bad for the retailer. But yet we might be purchasing, cheaper stuff as well now heading into Christmas after 2 years of recession. Yeah.
I think those are probably the two main kind of insights we get from this month's data. That price discounting is because of the Black Friday sales, but also maybe this buildup of inventory we've seen over the last 2 years. There's still a lot of stock. You were saying how you maybe bought a dress that was from last year, and now it's kind of cut down in price even more. But yes, the price discounting is pushing down the value per spend, the value per transaction, but also we're importing a lot of more low value goods as well from overseas.
Yeah. And the dress?
The dress is great. I haven't actually gotten it yet because I bought it online. But yeah, as you're saying, MJ, I literally tried this dress on last year. It was about $180 and I got it for $44 this year. So definitely some discounting going on there. And it's interesting that you talk about maybe there's still a bit of a build-up of stock, which might be the case in this particular case. But also, I think we've been anecdotally hearing now that coming into this Christmas season that retailers are actually going in quite light on stock. They've sort of learnt their lesson. They're erring on the side of caution, which could be a good thing in the sense that they might not have to discount more next year. But also, what if we do, see these rate cuts and consumer confidence grow coming into this festive season and then actually they're left short of stock? So it's going to be an interesting time. Does this recent data tell us anything of what we can expect for Boxing Day or the Christmas season?
Yeah, I think it's giving us a good indication that consumers or households, they now have, better or improved appetite to spend, but also the ability to spend is improving as well. We've had a few rate cuts since August, and inflation's really come off, so that's kind of helping more, cooling in price pressure. So that the financial situation for many households is improving. debt servicing costs have come off as well as interest rates fall. So the ability and appetite to spend is improving.
Yeah, and that's important, and it's all part of the recovery that we're forecasting into next year. It's going to be a slow recovery, but it's a recovery, and the seeds are being planted, right? Mango seeds or whatever types of seeds are being planted for a recovery next year. And I think those interest rate cuts are being felt now, and they're coming through faster because households have fixed for a shorter period of time. And the fact that inflation is now running below income growth, below wages, that cost of living crisis coming to an end, house prices, potentially going up next year will be another tailwind for household confidence. So I think those three key points should see, spending improving over Christmas. But if we were to have this discussion, I think this time next year, at the end of 2025, we'll probably look back and say, yeah, we've grown about 1% over the year. Inflation's still running at about 2%. Incomes are running at 3-4%. The household balance sheet is stronger and people are spending more. But right here, right now, we're just at that turning point, aren't we?
Yeah, there are a few tailwinds for consumer spending for next year. Another one I'd add to that is the housing market. And we know a lot of households' wealth is tied to the property market. So when we see house prices rise there and equity starts to build, that wealth effect should really kick in and help increase consumption into next year as well. So yeah, there are a few tailwinds for consumer spending next year.
Yeah, and hopefully that feeds into other type of spending as well. So more spending on renovations and stuff around the home, but then, within the housing market in general, more spending on building homes, which feeds right the way through into retailing when you end up, buying couches and TVs and stuff for new homes. So the housing market really is, quite important, and for that to turn around would be very, very good for construction, but also retailing.
Yeah, and I think businesses in general are waiting for a much stronger consumer so they can actually see that demand pick up, and then activity for what they produce also picks up. So that's why in general we're expecting a lift in economic growth. Second half of next year, when we see consumption stronger, business activity stronger, and hopefully that starts to fuel investment activity as well going into 2026.
Yeah, it's a big part of it, right? So when you're forecasting the Kiwi economy, like a big part of it, consumption is what, 65% of the equation? Yeah. So seeing consumption, improve now and then hopefully rise next year, that's a big part of the story, right?
Yeah, it is. I don't want to be a Debbie Downer, but the one headwind for consumer spending, just thinking about it, is our labour market, how that's still quite soft, and we're still expecting the unemployment rate to rise. So a few more, job losses next year, just given that the labour market often lags the broader cycle. So that, 2 years of recession we've had starting to weigh on labour demand. So we'll see a few more, employment losses, and that will weigh on household spending. That's why it's more of a second half of next year kind of story. But overall, I think tailwinds kind of dominate next year.
Yeah. And, by the RBNZ zone forecasts and by their hand, the unemployment rate's lifting to about 5.2 from 4.8 now, which means, another 12,000 people out of work. So that's why the recession's going to take a bit of time.
Hey, MJ, I've actually got a question for you. I know in the past when we've done these spending trackers, you have access to all sort of the categories in which people are spending the most. And I remember last year we even saw like a Barbie Oppenheimer effect in June last year. Is there any fun trends that you're seeing in spending right now in any categories?
Well, sticking to movies and events, they've been obviously pretty hard hit by the COVID pandemic and everything. So quite slow recovery. But you have these kind of events like the Oppenheimer event, which saw movie and event spend just spike. We saw it a little bit with this Glicked, what is it called? Wicked and Gladiator?
Oh, yeah.
Double duo, whatever.
Which I haven't seen either of which yet, by the way.
I've seen one. It was okay.
Okay.
But that kind of had lift in... Have you seen any?
No, I haven't seen them yet, no.
You should definitely see. I think maybe Wicked, not the Gladiator one.
I don't think Jarrod's a Wicked fan.
Anyway, we saw a lift in movies and events as well in November because of these kind of events that happened in that month. But I think just generally looking at the data, we're seeing this kind of move away from purchasing sort of physical goods like materials and all material goods and all that, and going more towards what's been termed experiences. So things like hospitality, movies and events, sporting events, all of these kind of, more service related categories are seeing quite a big increase. It may just be a normalization from COVID when we just spent on all things pools and pizza ovens.
Yeah.
But we're seeing this kind of underlying shift in consumer behavior.
Well, you're definitely seeing that in my household, for sure. Like we prefer to go out and do
Except
something.
you haven't watched Gladiator 2 or Wicked yet, so is it?
It's pretty low on my list of exciting things to do. We go out and watch football. So my son's mad into soccer or football. So we've seen the new Auckland team arrive on the scene, and they've done incredibly well. Plus the All Whites have played, so we've been to all of those games, which is great activity for a few hours and cheap.
Yeah, all these events, you've got more international musicians coming over. We had Coldplay and all the rest of them kind of come to New Zealand in the last time. So people are wanting to go out more and spend going out, whether that's even at a restaurant. That spend has been demand in restaurants and hospitality scene has been quite strong coming out of COVID. That's just continued.
Yeah.
But we are seeing this move away from material goods, maybe because we're still stuck with the same TV that we bought. That still looks pretty flash now. We don't need to upgrade just yet. So we're kind of seeing this move away from material goods and more towards services and experiences.
One of the fun things during COVID, though, was people locked up, bored and wanting something fluffy to run around and entertain them. And, the spending on pets, just crazy, all right?
Yeah, right before lockdown,
Yeah.
we saw just as much of a spike in pet spending as well as grocery spending. So we're obviously kind of bunkering ourselves down and trying to get us through the lockdown period. And now lots of people have lockdown pets.
Yeah. And funnily enough, I heard earlier this year from a dog breeder that there's actually there's too many dogs and cats. They saw this spike. They decided to spike their breeding, and now there's too much.
Yeah, I think we saw the same thing. We were looking at it where pet ownership rates have increased, and also the dog population has increased alongside with it. So it's funny.
New Zealand has like the second highest pet ownership levels in the world.
Yeah, some interesting stats just coming out of COVID. But this is all stuff we kind of see in our data.
And we saw it. It's right. It was cool. It was in the credit card data. It was in the transactional data. Spending on pet food, spending on pets. We saw that spike. That was kind of cool. Now you're saying we're seeing a spike in experiences and stuff. It's changing ever so slightly every year.
Yeah, and it's something where it's not just unique to New Zealand as well. We're seeing this move across abroad as well, this move away from material goods. It may just be that correction because of this overconsumption of materials during COVID, but I think we are starting to see some interesting shifts underlyingly.
Yeah, and what's happening online is, we were on this trajectory, and then COVID came along, and we all just, we all jumped online. Have we gone back to COVID levels, or, what's happening with that trajectory of spending online?
Yeah, I think that's just a structural shift higher. Maybe part of the reason why we've seen our data so strong is because more people are shopping online. So this is electronic cards. So people may not be using physical cash to transact anymore. So that could be inflating our numbers a little bit. But yeah, I think this online retailing has become a structural shift. We kind of covered it in the commercial property podcast last week. And we're just seeing that continue.
Yeah, no, I agree. I mean, over COVID, we had 300,000 Kiwis shop online for the first time ever. And I think, with that ease, people have really stuck to it. And I think online retailing is just going to continue going up from here. And just like I said, I didn't do any shopping in the malls over Black Friday. It was all online. So I think think it's only up from here.
Yeah, it's just the convenience of it. The Black Friday shopping I did was online as well.
Yeah. I've bought all my Christmas presents for my son and my wife, not in that order, online. And I'd say probably that lower spending more of it as well, except for my wife's present.
Okay, I don't know about you guys though. I saw Black Friday sales starting like pretty much in October. So MJ, in terms of the data that we saw, was there a lot of overall spend in November, or was it really consolidated to that Black Friday weekend?
Yeah, it's really interesting. So Black Friday, we saw most of the sales actually sort of in the middle of the month. Black Friday is meant to be the last Friday of November, the day after Thanksgiving in the US. But actually, these sales and these discounts actually have been advertised since the beginning of the month. So we actually saw a pretty strong November just throughout, particularly strong in the middle of the month. There was a sort of increase in the last weekend, but most of the spending occurred in the middle of the month.
And do we know, I know in the US, Black Friday is so crazy that people literally push each other over and start arguments. Has Black Friday, I know it's getting more popular. Is it becoming our most popular spending day of the year?
It has grown in popularity, but it's still Boxing Day. That's the biggest and busiest day for retailers. We see that big. In the last sort of post-Christmas, last sort of 5 days of the year, that's when you see the biggest increases in spend. And actually, because of that, December as a month becomes, has around 13% of total annual spend, which is pretty big for a single month. And that just tells you how much Boxing Day, both in terms of values and the volume of spend, is the biggest day.
Okay, well, that's it. We're done. Everything you need to know about household spending in New Zealand and what we're thinking into next year. Please like, subscribe, and forward to your friends. We'll see you next week.
You've been tuned into This is Kiwi Economics, Markets, Mystics and Mayhem. We'll be back next week for more analysis and insights.